Eye of the Storm, featuring Monex and the world-renowned commodities research firm, the CPM Group, led by Brazney and Christian.
Hello, my name is Sean Brazney, Sales Director for Monex Deposit Company. I have the great pleasure of having Brazney Christian of CPM Group with us today. He's one of the many analysts over there at CPM Group, as well as the founder of CPM. Thank you for being with us today, Brazney.
It's always a pleasure to be with Monex and to be with you, Sean.
Now, we're talking about our newest report, 2023 Precious Metals in the Eye of the Storm. And of course, I keep mentioning how I picture this treasure chest full of our bounty, our treasure that people are holding for these kinds of situations. And gold and silver being the real obvious treasure that we talk about often. But one of the metals that we don't mention, or at least I haven't really brought up in a while, has been palladium. And palladium was one of the best performing assets for many, many years. And it's been on a little bit of a downtrend. And we've been kind of trading between 1,300 and 1,500. Still looks like we might still have some risk to the downside, at least on the charts. I can only go by the squiggly lines in the charts, but rely on you on the data. Is there anything out there? I know we have a lot of investors that hold palladium for the long term. Is there anything that you can share with us that might point to a potential up leg in the price of palladium coming up?
I think that, palladium has the capacity to rise again. It may be several years before that happens because there are some strong headwinds that have been pushing the palladium price down for the last year or two. And those headwinds will probably continue for a while longer. That said, there are some positive factors going on. Palladium comes primarily from South Africa and Russia. Russia is having some production problems right now. There aren't sanctions or constrictions on palladium exports from Russia, nor on the Norilsk nickel, which is the big nickel palladium producer there. But there are restrictions and sanctions on the banks that they use and on the various other companies that they buy equipment and reagents and the things that are needed for mining, smelting, and refining. So they've had some reduction in production there because of the restrictions on the Russian economy. But I think the real positive from a longer term perspective is that a lot of palladium comes from South Africa, and South Africa has actually taken a larger stake of palladium output in recent years. And South Africa's platinum mining industry is looking at problems, and they're looking at lower production of platinum, palladium, and rhodium over the next 3 to 5 years, and possibly longer term. So I think that probably will contract palladium supply in the long term, 3 to 5 years, and that could lead to higher palladium prices.
On the coinage side, I'm kind of throwing this one in there from what we talked about earlier, but it's been really hard to find palladium coins. Have you heard anything on the supply side on when we can expect maybe some more supply on the palladium coins?
Well, I haven't really heard anything about it, and if I did, I probably couldn't tell you because we are advisors to mints, and we actually did do a lot of work with the U.S. Mint and with the Royal Canadian Mint on their palladium coins and palladium coin programs. The U.S. Mint produces palladium coins, and they do something that CPM Group actually suggested to them when they were considering making palladium coins, and that is they manufactured scarcity. They said, we said to them, palladium is not gold and silver. There's not this unlimited supply of investors who want to buy it. It's a very specialized metal, and so you should be conservative in your annual mintages And that creates a scarcity function so that investors who do want to buy the Palladium coin say, I need to buy them early in the year and get them out of the way. I'm not sure what the Royal Canadian Mint is doing right now, but they had been at the point where they were basically making Palladium coins on a batch basis. So, several years ago, we had a client who wanted a fair number of Palladium coins, and we went to the Royal Canadian Mint and said, we have a client who wants Palladium coins, and they said, we'll make them for him. And they actually made like twice as many. They said, if we're going to be making Palladium coins, let's make, extra, because other people will want to buy them, especially if this guy mentions that he's been buying them to his friends. So, the Palladium, because it's such a specialized market, it's much smaller. It's a fraction of the size and the value of gold and silver. It's a much smaller investment market. And as a result, the Palladium coins are not made in mass the way they are for gold and silver.
Last question I got for you today, Jeffrey, is of course this banking crisis that popped up, and we've seen gold and silver respond really nicely on the upside from some of this information. And gold holding steady on its trend continues to be a wonderful trend in gold, and a buy the dip kind of a scenario. One thing I'm hearing a lot out there in the news is the commercial loans that are being held by the small to regional banks, that there's a lot of chatter that might be the next shoe to drop. Do you have any intel on any of that maybe that is something real to look at and think about in the near term?
My knowledge of the situation, I wouldn't call intelligence. I mean, it might be intelligent, but it's public knowledge, and the Fed and the FDIC and the Treasury have written about this, as have other regulatory bodies and industry associations. The reality is that a lot of small and medium banks became the lenders to small and medium-sized businesses, and also into the commercial real estate business, and into a lot of tech startups and other startup companies. So they have really been the engine for financing a lot of the economic growth. Because if you look at employment growth, and economic growth, most of that comes from smaller businesses. It's not the big businesses so much as the smaller businesses that do the hiring and creating new jobs and new economic activity. And they have largely been financed by the smaller and medium-sized banks since the global financial crisis and Great Recession, 2008, 2009. And as a result, they are vulnerable to these smaller companies, which are more fragile. And it's a real risk. So if you get into an economic downturn, a lot of these banks will be facing an increase in non-performing loans. There's been some increase already, but it hasn't been as dramatic as it was in 2006, 2009. So they'll be facing that. And at the same time, because they are smaller, they don't necessarily have the staffing and the capital to have risk management and risk managers and oversight and CFO type of specialists in place to help them adjust their balance sheet for the changing economic environment. Because we are in a transition from that strong economic growth of 2021, post-pandemic and lockdown, to what seems to be heading toward some sort of slowdown in economic growth, if not an out-and-out recession within the next 24 or 48 months. So the smaller banks remain extremely vulnerable, and they are also increasingly critical to the overall U.S. economy. So I think the banking regulators, I know the banking regulators because they've been saying this in public, the banking regulators are extremely concerned about the financial stability and the ability to manage this transition on the part of these small banks.
Great information for us today, Jeffrey. Thank you so much for your time. And want to remind our viewers that you can find these kinds of details in our report. So please call Monex today, talk to an account representative, and get your free report today.